Ladies and gentlemen, welcome back to TMP Finance, where we make long and short-term investing simple. Today we're going to take a look at the NASDAQ and at the market, how it's performed this past week, and where we can expect it to move on for the next week. So without further ado, let's take a look. Today on the NASDAQ, we moved down 1.25%, and that is due to core PCE, and it's also due to personal spending, and we will take a look at that in a second. But right now, market it's kind of looking a little messy right now. NVIDIA, Tesla, Broadcom down over 3%, so not a great look. I don't think it's necessarily a bad thing for the market. I think this was not expected, but it's also not indicating that we're in a bear market. So I will touch on that in a second, but let's just talk about the results from these three things over here. So right now, core PCE, which is inflation before food and energy, it went up 3% from last year, so it's a little bit more than it was being anticipated. Headline PCE, which is like overall inflation for goods services, it rose 2.6%. So that's pretty much in line with what the Fed expected. And right now for personal spending is at 0.4 or a group 0.4% from last month. So people are earning a little bit more. Right now people are a little bit concerned about inflation. And before we get that interest rate cut, and speaking about the interest rate cut, next time that we do discuss interest rates, there's an 87% chance that we will get a 25% basis cut from the Fed. But right now, is inflation bad for the market? Let's just talk about that a little bit, because I think it is misunderstood. Obviously, inflation is not a good sign, but if you are an investor in the market and you do hold assets in general, as the dollar devalues, you're going to have more as your asset holds and retains the same value. That being said, let's say that your stock costs $100, but in 5 years that $100, the dollar has gone up 20%. Now your asset's worth 120%. So are you really making more money? No, but you are retaining the same value that you paid pretty much. And the same thing can be seen for Venezuela, right? You have very, very high inflation rate. However, you also have their stock market that has done extremely well. Like, this is just exponential growth. And that's not based on companies doing extremely well. This is just based on inflation. So is this something that I want to see in the long term? Obviously not. I think that it matters more about you're getting paid what you really think that you're getting paid, right? Your dollar's not devaluing. That's definitely more important. But if you're holding assets in the right now and you have a lot of assets in the market, it's not necessarily something that's bad. Again, inflation is looking to get reduced by the Fed in the future, but for the short term, it's nothing to be really concerned about. But let's take a look at the NASDAQ, down 1.25%. This is something, again, I did not anticipate. I thought that as we would have broken up above this huge gamma wall and this massive resistance, we would continue to move higher and make a new higher high. But right now, this is not still a bad time to be a bull in the market. Right now, I think that this is creating a bear trap for a lot of investors who are going short. And why am I saying that? Well, we've received a touch of a very strong support level. This is the same support level that we got a very crazy rejection from in the past. And right now, if you do take a look, you can see that we have started to slow down with either the sellers or we have more buyers in the market, most likely more buyers as we're in support here. And right now we have a bit of a change of market structure. You've gone from a very strong falling move, which is not sustainable in the long term, and then now you're in consolidation. If you were to draw something like a resistance line 2, you can see here that the market is also broken off the resistance line. It's gotten a very strong rejection from anything lower than the resistance, and right now we are looking to move much higher, I think. So right now, great risk-reward ratio if you're looking for a long position. I'm not saying that the market has to be in a long position, but this is your best risk-reward ratio, best probability, 4.91. Again, in bull markets, and this is like a cliche, obviously you want to be buying the dip, right? And this is the dip right here. So now it's time to put practice into play and do that. Now, if we do break below this support level here, obviously you're still not going long. You got to be reactional as a trader, and in the best way, meaning that you have a plan in place for when things actually do get executed, and you can execute your own plan. So what is that plan looking like? You're targeting the next support line, which is the one that we got the big rejection from. It was my mistake. So this rejection is looking at 22,900, about $23,000 for the NASDAQ index. and this risk reward ratio is not as great, 4.79, but it is still a good trade nevertheless, where you're making 1.59% on the chart. If you're a leveraged trader like me and the rest of my members in the Discord community, that is a very delicious profit of about 16%, I want to say, after our leverage, and this is a very probable trade there. So that is what I'm looking for the NASDAQ. Now for the next week, let's just take a look at the weekly chart for the NASDAQ, just so we can see where we're at, what our candles are looking like. So I'm going to pull up a weekly chart here. And right now we are looking a little bit bearish, but we have this massive rejection in the market here. Again, this is going to be a very key point if we're moving higher or lower. I think if we do get a rejection here and we make a lower low where we start to go through this support line, then we'll be able to move down all the way back to the previous support I mentioned at 23,000, or even potentially lower where we retest previous all-time highs here. So right now I do like the large wick that we had. However, I want to see more bullish action. And right now as the market's closed, again, it's not closing above anything or below anything significant, so it's really just a waiting game for the next week. But again, I think that we're either going to get new all-time highs by next week or meet previous all-time highs, or we're going to come down past this support level at 22,960. So that's my outlook for the NASDAQ. Let's take a look at some other sectors over here. We're going to take a look at Berkshire Hathaway. Now, while the NASDAQ hasn't moved in the past week, Berkshire Hathaway has moved up a whole lot. I've been telling everybody that I personally know to buy Berkshire Hathaway. Why? It's always making all-time highs. It's stronger than the NASDAQ. And when you have pullbacks which are very significant, like for Berkshire Hathaway, you rarely see pullbacks of this number here, about 15-16%. So this is a perfect buying opportunity, especially if you're buying right by support here. But I am a breakout trader. I like to see that we do have some bullish rejection from support touches, and then we are able to break the trend that we're in to show that we're in a bull trend. So we're currently up 5.44% on the chart after our leverage. I'm currently up about 16%, and so is the rest of my members in Discord. And if you are interested in learning how I place these trades, how I time my trades, what things I'm buying in the market, come take a look at the link in the description, mob.com/tnpfinance. You're going to get all the trades that I personally take in real time, when I get in, when I get out, how much money I'm risking, and so much more. If you are one of those people that think that the market is too high and everything's too overvalued, you're not looking at the market properly. There are tons of sectors, there's more than just tech, and right now you can make a whole lot of money looking at things like healthcare, looking at things like consumer goods, which we're currently invested in for a large chunk now. We're not really invested in tech too much, as we already caught the tech bubble. We bought April 23rd on the NASDAQ, and we sold maybe about a month ago at a very high point at new all-time highs. So that being said, if you are a trader that is looking for more support when it comes to your trading or investing, come take a look at that link in the description. But speaking about tech stocks, let's just take a look at where tech is situated at now. NVIDIA, you are in a bit of a range here, a little bit of consolidation. You're stuck between 173 or 171 to 183. So again, having confirmation and a break of a one-day candle above or below these levels is going to be very, very significant for where we continue moving. If we break below 171, we're looking for 164. If we break 183, you're looking for 190. Very, very simple there. Let's take a look at Microsoft. Microsoft has this, actually, this is a rather large pullback here. It feels like we're very high in Microsoft because we've been moving up such an exponential rate over the past few months here. But right now we're down 8.6% from the previous high here, and right now we have touched a somewhat major support. This is really the biggest support that I can see in Microsoft ever since we gapped up after earnings. So that being said, I do believe that Microsoft is a very good trade here, where you could be looking for a long position, something very safe, where you have your stop loss right below the swing low, take profit either at 519 or the previous high, or where you have a lot of volume here in the market for something like a 4/1 ratio. So that is Microsoft there. Again, I think that's a little bit more bullish. I am seeing this routing here where you're losing sellers, you're gaining buyers. That's my favorite shape to see. That bowl shape or V-shape recoveries are my favorite. Let's take a look at another stock that is in the Mag 7, Amazon. This is another stock that's looking to break out. When you have a support level that's rising faster than the resistance level is falling, that's showing that there's still a lot of buyers. Even if we're kind of flatlining at the top here, you're still seeing higher highs, which are confirmation of a bull market. especially after a big pullback. When you see a large pullback and you see buyers rush in the market, that's showing that the stock is very undervalued and that investors are getting into it and they don't want to see the price fall any lower. So that being said, once we do get a break of this falling resistance level, you're buying in. You're looking for that take profit at 267. That is based on my Fibonacci strategy that does have a very, very high win rate. And then you're putting your stop loss trailing the support there. Very, very simple. But that's my outlook for the market. Berkshire Hathaway is doing very, very well. You have tech that's kind of in a cool down, but I still think that it is bullish. We're still in a very strong place in the market, and we don't have any macroeconomic factors that are going to be influencing us to go into a bear market. So if you are expecting a massive pullback of something more than, let's say, 7%, I'm going to tell you, unfortunately, you probably need to take a look at your price action again, or at your charts again, or just kind of revalue or reevaluate your stance. But that's it for this week. Thank you very much for tuning in, and thank you guys so much for the support that we've been getting in the channel for the past week. But next week we'll come back stronger with more trades, and then I will see you then. Later, y'all.